Hey guys, welcome back to the MattByron.com show. Today I'm excited to have my great friend Shash on our show. Shash is a brilliant young real estate investor, and today we're just going to talk about deal flow. We're going to talk about what's happening in his world of real estate investing. Shash, welcome to the MattByron.com show. How are you?
Matt, thanks for having me, man. Excited for this conversation.
And you and I have been corresponding back and forth about some big commercial real estate deals that we're looking at. Can you give people a little background into yourself? I think you've got background in private equity real estate investing. Is that correct?
Yeah, exactly. So I've worked in real estate pretty much my whole career. I started my career on the investment banking side. I worked at a small bank called KeyBank, where we were doing real estate investment banking. Spent about a year or a year and a half there. Was working with really micro cap REITs that had over levered capital structures. And so it was a really good experience because a lot of these micro cap REITs that are publicly traded, but they didn't really have like a robust finance team. And so got to learn a lot about like distressed opportunities. They got to see some of the mistakes that they made early on, which was kind of fruitful for me. I then went to JP Morgan, spent a couple of years there, was mostly doing lodging deals. We worked on the sale leaseback of the Bellagio, MGM Grand, and Mandalay Bay. That was a really interesting deal because this was pre-COVID back in 2019. And at the time, MGM Resorts, one of the largest casino operators, still owned their real estate. And so the public markets, it attracted an activist investor, and the public markets was valuing the real estate at a pretty high cap rate for marquee Las Vegas real estate. And so the idea was we should go do a sale leaseback of this at a low cap rate, use all those proceeds to buy back stock and, kind of arb that, I guess, real estate multiple. And so we spent a couple of years doing that.
It's really interesting when you're talking about deals like this, massive deals on properties that everyone in the entire country knows. You're talking about doing a lease back. Why would that be attractive to investors? What's the strategy there? Can you give us a little insight into what happened there?
Yeah. So MGM Resorts, you have this company that operates the Bellagio, right? And so they own the real estate of it and the operating company. And so they're publicly traded. And so depending on where you value the operating company, there's a value for the real estate that the public markets are ascribing to that company. And so the idea was if you do a sale leaseback, you free up a lot of capital as an operating company. So you could use that capital to go back to, buy back stock, to invest in more casino properties or more operating companies. And so at the time, the investors would really, there's a lot of interest in partnering with a group like MGM Resorts because they have really strong credit. They're probably going to pay their rent on time. So the idea was you have this really good core real estate in Las Vegas. Why don't we do a sale leaseback of those assets with an institutional player like Blackstone at, let's just say, a 5% cap rate? That's pretty attractive borrowing, especially given where rates are today. Then you take that, if the public markets are valuing the real estate at a 7% cap rate and you sell it in the private markets for a 5% cap rate, so you're selling it at a higher value, you take that value, and if you buy back stock, your free cash flow per share or whatever may increase dramatically, and it might be good for your shareholders. So that was the idea. Interesting enough, this was pre-COVID. In 2019, after that happened, nobody was going to casinos. And so luckily they got through it. Vegas did come back. I believe, I wasn't working on the deal after that, but I believe they did pay their rent. I know Blackstone still does own the assets. They recently did a recap transaction with a triple net REIT called Realty Income. I'm not familiar with how it's doing today, but that was kind of the logic and the thesis of the deal back pre-COVID.
Sure, Shash. And I think it's one of the things that you and I connected on at first is distressed assets. I mean, candidly, you and I were talking about a deal I was looking at here in Houston, about 408,000 square feet, a distressed building. It turns out we passed on that. Let's talk about, before we dive into deals, talk about where you want to take things going forward here. You've had this great experience in commercial real estate, working on high-profile properties, working with very sophisticated investors at the institutional level. What's your goal looking forward 5 years with your current real estate investing? Where do you want to take it? What's your vision right now?
Yeah, so I think to give you some context, so after JP Morgan, I went to this group called GI Partners where I was actually investing in real estate, and we were doing deals. We were doing life sciences, data center deals, converting some empty office buildings in Boston to lab. And so during that time, I got connected to this family office who was buying a portfolio of multifamily assets. And so the light bulb went off in my head after working with them a bunch is, hey, I've always had the entrepreneurial itch. I think I have a good judgment on these deals. I'd love to pitch them as LPs and go out and find deals myself. And so that's where the rest is history. As far as vision goes, I like being very opportunistic because I think you could be nimble with what makes sense in the current environment. Right now, I think we're approaching a really opportune buying moment in multifamily. I also do like ground up development. So the idea is continue to do really good deals, build a really strong track record with our partners that we already have, and bring in more partners. And as we build a big track record, leverage that to go out and raise institutional capital, and do bigger deals, more complicated deals, and just keep going from there.
I think it's interesting too, Shash. I mean, you've had a great background in real estate investing, working with these great institutions, and you've decided to kind of go at your own, start your own private equity real estate investment venture. What was part of that thought process, and how do people decide between having that great job with a major corporation and staying there for 10, 20, or 30 years versus doing your own venture? What was part of that thought process for you, and how come you've decided to do that?
Yeah, it's a really good question. I think for me, I've always had the entrepreneurial itch. When I was working at GI, I got to see the deals I got to get exposed to that process, how investment committee works, how people really, scrutinize deals. And I found that my judgment, like I really agreed with my judgment, and I got some confidence from some of our senior leaders there too that, that my judgment was right. And so I got to learn from some of the mistakes we did. And I've always had the entrepreneurial itch. I had some ideas to maybe start some other tech companies, but I realized, I'm actually really good at real estate. And so I should stick to real estate and just continue to identify good deals, continue to just go with the flow. And so hope that answers your question.
Yeah, 100%. And before we start our show, you mentioned that there was a deal that you're working on, and unfortunately, it sounds like it's kind of gone astray. Can you give us a little insight into the background on that deal, what you're looking at, and what's going on?
Yeah, so it was 187 units in Texas. It was we were going in at around a 9% cap rate. Our business plan initially was to go in, invest some capital in the space, make it nicer, ideally command a higher rent. And then once we got it under LOI, we went to visit the assets, and there was unfortunately two things that ended up killing the deal. One, our business plan of going in, being able to, invest some capital, increase rents. I don't think that makes sense in that demographic, just because rents are maxed out a little bit, and the demographic is very, it's struggling a little bit. So there's not a market for kind of higher multifamily product there. And then number two, the appraisal value of these, the appraised value of these assets were significantly lower than our purchase price. And so we talked to a tax specialist in the region, and they said, listen, guys, you guys are probably going to get dinged with a pretty big reassessment. That would be like significant increased real estate taxes by like 75, 100%. And then so after that, we underwrote the deal again. We were going to assume very attractive assumable debt, but then we underwrote the deal, and the price we would need to pay is below the assumable debt. And so we were just like, I don't think this makes sense anymore.
Curious too, you're talking about the assessed value of the property and the property taxes. I think sometimes real estate investors, they'll buy property through a special purpose entity or a single purpose entity. They'll buy the LLC instead of buying the property to obfuscate the transaction and delay the increase in property taxes. You know what I'm talking about?
Exactly. Yeah. So if you buy the LLC, then in non-disclosure states, my understanding is in non-disclosure states like Texas, then like the appraisers won't see, it won't be obvious that there was a change in ownership.
Right.
Yeah. And so an assessment is less likely, is what our tax attorney said. What's your understanding?
Yeah, I agree. And I think that I heard something about $5 million being a key number. I think Grant Cardone posted something about that recently. I'm not sure in the full context of that, but definitely something worth looking into for our viewers out there. I'm curious too, Shash, you're talking about real estate trends here in America. Obviously, mortgage rates have jumped up in the past, 12, 24 months here. We've seen a major spike in rates, and there's some tectonic plates moving in real estate. What is your outlook? Any certain states, like you mentioned Texas, any certain states or regions that you like most right now?
Yeah, I think Texas and Florida are certainly going to continue to grow. Just from migration, like the states have grown like crazy. I think they will continue to attract people due to, strong quality of life. Um, One thing to keep in mind about, I guess, Florida is just insurance costs are going up significantly. But like if you adjust for that in your underwriting, it's fine. Like you could kind of, you could it'll be fine.
And the insurance you're talking about is for hurricanes and flooding, I think. Is that right?
Exactly. It's super hard to get insurance in Florida today, just because of the recent natural disasters have put a lot of these insurance companies out of business, and so they've hiked up insurance costs dramatically. But there's still a lot of growth, and there's still a lot of people moving there, and so it's going to be interesting to see what happens. But I'm definitely still bullish those two areas. There's also a lot of I think in the Midwest, there's going to be I think people are going to continue moving to the Midwest because there's a strong quality of life. You have some strong areas, especially in like, maybe Rapid City, the Dakotas and maybe Minnesota.
Really? That far north, huh? What?
You could get really good yield there. So like you
Yeah.
could go in at a really high cap rate and there's not really many competitors. And so you could get really
Right.
good product at a good cap rate, and the demographics are growing, they're growing, they're not decreasing, but it's not like your rapid growth, but still the pricing isn't too competitive. And so you could get stuff at a good discount.
I think that's really interesting is how there are certain regions of the country that have these great cap rates, like you're talking about North Dakota or South Dakota. And then there are other regions in the country, say like Boston, Massachusetts, beautiful cities, great cities, but the cap rates aren't there, right? So as far as the strategy goes, people have to balance between a cap rate or property appreciation and a stable asset. What's your take on that and your overall strategy? You think cash flow is better, focusing on the cash flow, or focusing on stable, long-term, slow equity build?
Yeah, I think it really depends on what your objectives are. I think so Florida, let's just talk Florida, for example. So
Sure.
multifamily today development, because your point, cap rates are so low, multifamily
Yeah.
development just doesn't make sense because costs are so high. But that
Right.
doesn't mean that development in Florida doesn't make sense. For example, there's a shortage of housing inventory. So like for sale houses, condos, those are very, I think condos definitely still pencil because, there's still a lot of demand for sale housing, despite not being, there's been an abundance of supply in multifamily. There's a good amount of supply in condo, but the condos seem to still be getting sold, which is interesting.
Do you think that part of that might be because people have these low interest rates from the COVID era of 2%, 3% fixed for 30 years? They're kind of locked into their house. They don't want to move. Do you feel like that's perhaps causing this disparity between single family condos versus multifamilies?
I think so. There's just not inventory coming up. So like the home builders, they're crushing it. If you look at the home builder stocks, I don't know how they're doing over the last month. The home builders are absolutely crushing it because they're the only group in town that could give you inventory.
And let's talk about deals going forward here. So earlier on, you mentioned that you're into distressed assets. That's one of the niches that you're targeting, and multifamily properties. When you're looking for these, how do you do it? Do you do it through brokers? Do you do it off market? Are you sending out letters? What's your strategy for generating deals, and what are you looking for in these deals?
Yeah, so it's a little bit of both. We've most of our pipeline is off market through brokers. We also do, we're in touch with the brokerage community. They know that we're active buyers, so they do bring us deals prior to bringing it out to the market. We also do, we do some cold calling for the assets that we like. And we also, we bid on a couple assets out of foreclosure, which is more of a fragmented process. It's done by the
Okay.
county at the county level. And it's like, you go to the auction, like the courthouse auction. I went to one recently in Brazos County, and
Yeah.
it's a pretty cool experience.
Yeah, auctions are wild. I haven't been to one in several years, but I used to go to a lot of those auctions, and it's wild. I've seen an auction. I remember this girl telling me about an auction she had gone to, and there's only one other bidder, and so they agreed. She said to the person, "I'll pay you $10,000 to leave right now," and she cut the guy a check, and he left, and then she bought it. So I mean, there's all kinds of crazy strategies I've seen at auctions. I've also anyway. I shouldn't. It's a wild circus. Yeah.
But Matt, so you had the vision, maybe like the abandoned tower that we were talking about,
Yeah,
of
yeah.
like converting that into storage. Like that vision, maybe we should just talk about that vision a little bit because it's pretty interesting.
Yeah, thank you, Shash. Yeah, so this is actually for our viewers back there who are watching our show. This is how Shash and I connected, is that I was reading his posts on Twitter and X.com, which are very insightful, really thoughtful real estate analysis posts, Shash. And we just started the conversation about this building I was looking at in Houston. It's 408,000 square feet. We won't mention the exact location, but basically a building that has been literally abandoned for 30 years. And the current owners, they want to turn it into housing. When you look at it, the bones of the building are structurally solid. But this one particular area, there's too much housing, there's too many hotels. So my vision was to convert this to 480,000 square feet of storage. We're still trying to hammer out a deal with the sellers. I think that the price is probably 4 times too high. But it was a fun one to look at. And I think what I really appreciate too, Shash, is that your financial analysis, the rigor, the details, outstanding. Your models are incredible. So, I found this property, I passed over to you, you generated a model for it, and pretty quickly we were able to say, hey, you know what, we got to pull the plug on this one. We got to cut our losses on time and walk away from it. But that's a fun one. What do you want to say about the property, Shash?
I really liked your vision about it because
Thank you.
I guess it's in a MSA that's very patriotic,
Yeah.
which is amazing. And so it's a huge building in the middle of
Huge.
downtown. It's been abandoned. Building
Yeah.
a national building, putting the U.S. flag on it would just be such an attraction to it, right? Like people would see it driving on
Yeah.
the highway, and it would. Any use we did would sell out. It's just a matter of getting the deal at a right price where it kind of pencils. But I loved your vision, how you were thinking about it.
Thank you, Shash. And I think that, sometimes in these deals, these big deals, they take time. It takes time to have a meeting of the minds and get the seller and the buyer to agree on, okay, let's be practical here. What's a realistic price point? What's a realistic vision for this building? And that building there, I've been working on that deal for a year and a half, and lately we've been just stuck. But maybe a half a year or 2 years from now, that deal comes together. So these big deals take time. And Shash, actually, you and I, we're currently talking about a big deal that you've got going on. Do you want to give us a little insight into that, Gem?
Yeah, so it's a big for sale housing development in a very strong area of South Florida with limited land supply. We're in the early innings right now, but we're super excited about it. The idea is the existing product in the area is it needs some it needs a little bit of a new touch, and so the existing product is largely done by groups, boomer, for lack of a better word, older developers who are less out of touch with kind of what the younger generation wants. And so
Yeah.
it's a very strong area of South Florida. And we think from a financial perspective, there's a big shortage of housing in the area, and there's a strong demand of, there's a strong influx of people moving to the submarket. And so we think there's a compelling opportunity to build for sale housing.
And do you want to give us a sense of like the deal size and dollars or units that you want to build, or do you want to share that or not?
So it'd be luxury. It'd be between 350 and 400 units.
Yeah.
As far as sellout price, minimum would be about around 1.5 million. Penthouse would go for a lot more than that. Total deal size would probably be, the total sellout would be, over approaching $1 billion.
Yeah.
It's a massive deal, Shash. It's a gem. It really is. It's huge. I think you're gonna make it happen. We gotta make it happen.
We will. We're in the early innings, but it's so fun. I mean, I just love. I love collaborating on these big projects. And one thing we kind of realize is the bigger the deal, the better of a team you could attract. And so you just attract more high quality people. And as ironic as it sounds, it's a little bit easier than doing a smaller deal.
Yeah. We were having a call last week with a developer on that property, and he raised that point. And then we also brought in a buddy of mine who's the top broker in Boston, Mass. I mean, he's selling stuff at $2,500 per square foot, which is the top of the line luxury for Boston, Mass. So we bring in the best developer, bring on the team, bring in like my contact and people who are all-stars, dedicated professionals, that's when things are seamless and smooth. And that's when you get the top of the line product as a result, right?
Exactly. Yeah, I'm super excited to see it progress.
Well, let's talk about, hunting right now. Any other stuff that you got in the works, or any other deals that are like, working, not working? Anything else you want to share right now, deal flow wise?
Yeah, so we have a bunch of, we send out about 5 LOIs a week at least.
Wow, that's
And
great. That's
so,
great volume there, right?
yeah, exactly. Right now, a lot of our investor partners want sort of higher yielding assets, just given where rates are today. And so we're really focused on, buying strong multifamily assets. For Class A multi, our target is going in between at least a 6.5% cap rate. Target cash on cash of around 6 to 7%. And for Class B, we try and target at least an 8% cap rate. For Class C and value add, we try and stabilize at a 9% return on cost. We think that this kind of makes sense given that rates kind of went up, and so cap rates are resetting.
Talking about the 6.5% target return on Class A multifamily, how do you justify that when mortgage rates are, say, 7 or 8%? Or is there a strategy that you're employing to get lower rates on mortgages? What's your take there?
Yeah. So I would say 6.5% at least. Ideally, we'd like it at a 7. Today, we're looking at a deal in right next to a large university. It's a Class A asset. The brokers took it out to market, busted process, no bid showed up. So we're getting a second look at it.
Nice.
Seller has to sell. We are going in at around a 7% cap rate for Class A multifamily, financing at around a 6%. So, I think 2 years ago, this asset would probably trade for close to double the price. So we like our basis here. Yeah. And there's not much liquidity in the market. So that's why I think it's a really good buying opportunity for investors.
I think that's what we're seeing is this liquidity transition right now, right? In the real deal, like I keep seeing these stories pop up almost daily of commercial properties trading for 25% less than what they traded for a couple of years ago, or 50% less. We're seeing a major transition, a major correction in commercial real estate. Do you think that's going to hit mostly commercial real estate? Do you think it'll also hit residential hard, or what's your overall outlook on that correction?
I think it's mostly going to be commercial because there's just such a big lack of supply of resi. There's not really much housing. And so I think commercial, the story has been, in 2021, people were getting way over their skis. Everything was frothy. So if you remember the stock market, when the stock market just like jumped up, same thing kind of happened in commercial real estate, except stock markets, there's the market updates every single day. Real estate is illiquid. And so it updates really slowly. And so there's also a lot of leverage used in real estate. And so a lot of people bought at the peak. Asset values have gone down 20–40%. You still have a lot of debt. And so the equity in a lot of cases is just wiped out because these folks bought at, very peak pricing. And so that's kind of what we're going through right now.
Shash, I really love your real estate insights. We're down to our last couple minutes here. In wrapping up, where's the best place for people to find you right now?
So I'm on Twitter. My handle is at ARYAL in 1994. I should probably make that a little bit better, but Aryal is my last name, and then 1994. Twitter's probably the best spot to find me. My DMs are always open, so feel free to reach out.
And as far as deal criteria, what you're looking for?
Deal criteria, multifamily, Class A at around a 6.5, at least a 6.5, ideally a 7. Class B at least an 8. And value add, we would stabilize at a 9% return on cost in today's market. So
nice.
And our firm is called Peak Vortex Capital. My email is s@peakvortexcapital.com. PEAKVORTEXCAPITAL.com.
And where are you right now, Shash? I meant to ask you that. Where are you right now?
Yeah, so I'm in Mexico right now.
Nice.
My fiance's her grandparents live out here, so we're working here throughout the week, and the next week her sister's coming down too, so we're gonna take some time off later next week.
Sounds like some quality time for the family. That's outstanding. I hope
Yeah, are you in Texas?
I'm in Texas actually. I'm gonna do a little quick trip out to Hawaii. I didn't even mention that, but Yeah, I'm in Texas right now, and I'll be jumping around a little bit for the holidays as well, so it should be fun. Shash, thank you so much for coming on the show. We hope to do some big deals with you soon, and we'll thank you again.
See you.
Matt, it was a pleasure. Thank you so much.
Cheers. Bye.